Hello, I'm Robert Lovell. I'm the Deputy Editor of AccountingWEB, and I'm here today at the 2020 Tax Conference in London. I'm here with Chris Meyer from Orchard Funding.
Our role within the practice is really as an additional service within their credit control process. Most practices, as you're probably aware, and most people watching this are aware, run several methods of client payment. Standing orders which are maintained and handled internally. There's some practices will have credit card options which again are internally handled. Some will go as far as taking on and buying in a service provider to provide them with a direct debit facility that is externally maintained but offered to the client from within the practice. All of those options are designed to get the client paying the bill. Some will give the client spread payments and some will obviously incur charges towards the practice and or the client. What we do is add a facility to their suite of service offerings that allows both the client to take spread payments over a maximum of 12 months and the practice to be paid in full in 10 days. So what we do is slightly different to standing order in that we've got the payment in full option, whereas standing orders doesn't give that. Credit cards will not give the client in the main the option to pay monthly, although you can pay your minimum charges, but effectively you will find your fee could spread over a number of years, and there is a merchant charge payable by the practice for that transaction of maybe up to 4% depending on the provider. And external direct debits that are provided to the practice, again there's a charge for that service provision because it is very, very difficult these days to get an originator's number to offer your own in-house direct debit facility. So we sit alongside other payment methods as opposed to try and replace them, so that it gives the practice the opportunity to approach any client at any time with a method that ideally should fit that client's financial situation.
And what sort of take-up are your clients reporting on that?
Yeah, well, we work with well over 600 practices nationally, and once they've got the facility set up for them for the Orchard spread payment option, we tend to find there is roughly between 10 and 25% of the fee book that is offered or uses the fee funding option. Sometimes you'll find there are peaks and troughs. So when a practice takes on our type of facility, there'll be a huge amount of use in year one when they get rid of some age debt that's owed money for a long time and they've got new clients that use it as well. And then it will stabilise but maybe dip down in year two. But normally speaking, annually, there's an 84% renewal rate from the client's point of view on their credit spread payment option for the practice fee. So every year we get around about 84% renewal on the credit agreements. Practices, once they've got the facility, don't tend to forget about it and leave it altogether. It's a valuable option to get money into their bank quickly and slow it down from the client's bank account, so the client gets the best of both worlds.
Well, thank you very much, Chris, for explaining that. And where can AccountingWEB members find out more about Orchard Funding?
It's a pleasure to talk with you. We've got our website, which is up and running, www.orchardfunding.co.uk. Alternatively, just Google us, we'll pop up on the web, give us a call. We're very happy to talk you through what we do, come and see you and show you what we do, or bump into us at one of the conferences through 2020 or one of the networking groups.